Morning guys. Some of the stuff we talked about yesterday came into fruition that the Aussie managed to hold on to 72. Interestingly, it rallied hard off the larger than expected 50 basis points, but quickly returned all of that. It wasn't until the US dollar started to weaken during the European session that it sort of made its way back up there again. Other than that, US dollar did cop some weakness, and there's no discernible headlines regarding this. Other than the World Bank has downgraded global economic growth and expecting stagflation pressures, but that's been on the cards for the last 6 months, as Zero Hedge has noted. So that's really the only major headline overnight. And the people just started buying the US stocks, so there was a bit of a panic buying by the look of it. As you can see, as soon as US opened, people started buying stocks, and that led to weakness in the US dollar, as we can see here. And we saw some of the markets sort of regain or have end the day stronger against the US dollar. However, the overall picture is still that the US economy is overinflated and under-demanded. The global growth is going to be struggling with this inflation. Commodity prices continue to rally and hold the highs. Here we've got copper back towards the highs, oil back towards the highs, spot Brent back towards its highs, natural gas holding up there, and all the precious metals sort of treading water at this stage. So the overall picture that we discussed yesterday, and I'll go over today, is that we still expect interest rates to increase over the short term to try and combat inflation, but it's not really driving the overall picture, which is we've got undersupply due to constraints from war and COVID. That's still dragging on the market, and demand is still quite low. And the weaker demand is because people don't have the disposable income. Wage growth has not been growing, whilst inflation has. So, or if wage growth has been growing, it's certainly not at the pace of inflation. So the disposable income is getting tighter, and raising interest rates is only going to reduce that demand, as people, for Australia, for example, people are now having to fork out more money to put into their mortgage as interest rates are going higher, means less disposable income to purchase other things. So we've got that supply-demand issue, which is going to continue to affect the market, and we're looking for US stock markets are still in a bear market situation. Certainly a downtrend if they're not like the Nasdaq already in a bear market, and we're looking for that to continue. The theme, Boris Johnson won his vote, but certainly it was a bit of a shake-up for him, a wake-up call. It'll be interesting to see where they go from here. So still expect US dollar to dominate against the majors, and I'll be looking to fade or buy the US dollar and fade it against any of the sort of weaker currencies such as the pound and the euro and the yen. Not so much against the CAD because it's got that oil support. The Kiwi and the Aussie will be a little trickier now that interest rates are up, and we're going to be probably raising faster than what people expected. Plus, China's coming out of lockdown, so the demand for Australian resources should increase and potentially hold the Aussie dollar up pretty well. But still, we're expecting this US dollar over the dollar index here to give the support for that. And look to fade the euro and the pound. See if you can get in on the shorter term. So something like the euro here, got a bit of a squeeze happening here, but certainly getting lower highs and lower lows over the last little bit. And you look at the 5 minute there's certainly opportunities to sort of get short in the downtrend. There's 3 opportunities there, and then when it broke that downtrend, there's opportunities to get in on the uptrend. Right now, we've got the new day, so Euro's a little trickier at this time of the day. Euro sort of comes into its own later in the afternoon, as sort of towards the end of the Asian session. Okay, that's it for the day. I'll see you next time. Thanks, guys.